Hello, welcome to Qianmo Accountants. When you buy a cup of coffee, a pair of shoes, or even pay for professional services, there is a hidden extra on your receipt, and that is tax. In Australia, that tax is called GST, the Goods and Services Tax. In some other countries, it may be called VAT, Value Added Tax, or Sales Tax. Every government needs revenue to operate, and most of that revenue comes from taxes. So people have explored many different ways to collect taxes. The key challenge is finding the right balance. Taxes must raise enough funds for the government operation, but in the meantime, make sure not to place too much burden on its residents. To achieve this, countries around the world have developed various types of taxes. The most common taxes are income tax and consumption tax. Australia's GST is part of a broad family of consumption tax used around the world. How does GST work? Let's break it down. GST is Goods and Services Tax. It's a 10% tax on most goods, services, and other items sold or consumed in Australia. It was introduced on 1st July 2000 to replace a range of older sales taxes and to simplify the system. GST is, in essence, a value-added tax. That means it's charged at each step of the supply chain, from the manufacturers to the wholesalers to retailers, whenever there is an added value. But ultimately, it is the end consumer who bears the cost. Businesses simply act as the middleman who collects the GST on behalf of the government. Here is how it works. Let's say a timber supplier sells timber to a furniture maker. The timber is $100 and the GST is $10. The timber is sold for $110. The timber supplier received $110, but the timber is only worth $100. The other $10 is GST. So the timber supplier gives $10 GST to the tax office. Now the furniture maker makes the timber to a furniture and sells the furniture to a retail store for $300. There is $30 GST charged. So the furniture maker received $330. $300 for the furniture and $30 GST is submitted to the tax office. But in the meantime, it can claim back that $10 GST it has paid on purchasing that timber, because that $10 has already been submitted to the ATO. So the furniture maker actually sends that GST of $20 to the ATO instead. Now, the retail store purchased the furniture from the furniture maker to sell it in its store. The purchase price is $330 with $30 of GST, and it sells the furniture for $550 to the end consumer, including $50 GST. The GST the retail store pays to the ATO is then $20, which is the $50 GST it collected, and in the meantime, claim back the $30 GST it had paid when purchasing this furniture from the furniture maker. Eventually, the ATO received $10 GST from the timber supplier, $20 GST from the furniture maker, and another $20 from the retail store. But none of those businesses bear the cost of the GST, because GST is added on top of the price of the products they sell. It is the end consumer who paid the $550, with the end product price being $500 and GST paid being $50. And that is the total GST the ATO has received at different points of the supply chain whenever there is a value added, as these products move through the supply chain and reaches to the hands of the end consumers. So that's a quick overview of how GST works. It is a type of tax used in many countries because it is considered an efficient and fair system that applies equally to everyone. And it can be a large source of tax income to the government since it's imposed in all the value-added points of the supply chain in the economy. So in some countries, it is also called value-added tax. To effectively collect the GST, a country needs a well-developed and smoothly functioning social and administrative system. This is because GST is collected at every stage where value is added to goods and services. Without a mature framework to support the accurate reporting and efficient collection, even a well-designed tax system would be difficult to enforce in practice. Fortunately, I believe it's fair to say that Australia has a robust and mature system in place, from the legislation and its interpretation to education and enforcement. The network of around 30,000 accounting practices across the country definitely plays an essential role in maintaining the integrity of the tax reporting on a daily basis. Who needs to register for GST? Not every business in Australia has to deal with GST though. In general, the rules are businesses with a turnover of $75,000 or more must register for GST, but non-profit organizations have a higher threshold of $150,000. Once registered, businesses must add GST to the price of the taxable sales and lodge the business activity statement, which is known as BAS, usually quarterly, monthly, or yearly, reporting the GST collected and the GST credits claimed. That's all goods and services subject to GST once a business is registered for GST. Most everyday goods and services are subject to GST, but there are exceptions. For example, some basic foods like the bread, the milk, the fresh fruit and vegetables, certain medical and health services, financial services like the bank fees and loans, residential rents, etc. Those are a few typical items that are not subject to GST. If you're working on a GST reporting task and not sure whether this product or the service is subject to GST, you will need to check the ATO's website to find out. Australia's GST is a part of a broader family of value-added taxes used around the world. In fact, more than 160 countries have some form of VAT or GST. The idea is the same everywhere. Tax consumption, not income. The tax rate can be different between different countries though, generally ranging from 5% to 20%. Australia's GST is actually lower than many European countries, where 20% is common, and many countries also have reduced or free rates for essentials like food, medicine, etc. While GST is effective and worldwide used, there are also many criticisms about GST. The main point is, first, because GST applies the same way to everyone. People on lower incomes often feel it more. Exceptions for essentials like food, health, and education can ease the pressure a little bit, but they don't fully fix the problem for lower income people. And second, compliance burden. For small businesses, GST reporting and record keeping can be time consuming. And third, potential for avoidance. Complex structures, cross-border transactions, or cash payment can sometimes be used to underreport GST. But despite its flaws, GST or VAT has proven to be one of the most important and stable revenue tools government have. For consumers, it's often invisible. It's built into prices and paid automatically. Nobody really thinks much about it. For businesses, it's a compliance task that's unavoidable but manageable with good systems. So what is GST? It's a tax that is designed to fairly and efficiently raise revenue while spreading the tax burden across all consumers. Whether you are buying a latte in Sydney, shopping in London, or paying your phone bill in Singapore, chances are some form of GST, VAT, or sales tax is built into the price. It's a reminder that while the name differ, the principle is the same worldwide. Governments rely on consumption taxes to keep the wheels turning. Thank you for watching. See you in the next video. Qianmo Accountants. Help Australian graduates start their accounting career.